Yeah.
Great.
So today, how to trade gold, price action on the gold, right? Part 2. Sounds
Absolutely.
exciting content.
Absolutely. There's been lots of feedback. People wanted to see more about it, so they ask. We are
Fantastic.
happy to deliver.
Absolutely. They have the right guy in front of them to deliver this this education.
Thank you.
Also,
Thank you.
you
Thank
can
you.
try to share your screen.
Boom. Hopefully that'll come up. Hopefully that's all everyone can see me. Hopefully everyone can hear me. That's that works, I hope. Fabulous.
Okay. So I wish you the best luck and also happy weekend.
You too, Theo. All right. Thanks very much for the introduction. Thank you. Thank you. And good afternoon, everybody, and welcome to the next in our Admirals Price Action webinar series. We're on a little bit of a Friday afternoon. It's just because it's August and people are moving around. But nonetheless, we're here to talk about how to trade price action on gold, part 2. Why is there a part 2? Well, we did a session a few months back now, maybe sort of 4 or 5 months back on trading gold. And, we always ask for feedback on our sessions. You'll get a feedback form at the end of each session. Here, we always ask if you just take a couple of moments to fill that in. Any thoughts? We appreciate it. We want these sessions to be valuable and useful for you. And a lot of the feedback we got was that we wanted more on trading gold in particular. So here we are, ladies and gentlemen. Sort of you ask is the and we will deliver. So if you'll just bear with me one moment, I'm just going to make a quick little tech change, and then we'll crack on. So just please bear with me 1 second. Okay. Excellent. I hope you can still hear me. Hope you can see the slides and such. There we go. As I said, just a little bit of just making sure the tech was all set up correctly, as always. Here we are, but that's what we're here for. So let's get on with talking about price action on gold. Remember, here we are, Admirals, a Forex and CFD broker with a global presence and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and giving you the opportunity to engage with markets utilizing both the MT4 and MT5 platforms, and also the Admirals Supreme Edition. Also, if you have any questions about Admirals, please get in touch with your account representative and they'll be very happy to help guide you. So what will we talk about? Well, not undoubtedly, we'll always start with a little bit of an introduction on price action and the sort of routines and behaviors that we are looking to embed as price action traders. A quick recap of elements of part 1, which includes about, why is gold so popular with traders and investors? And most importantly, how can we improve our price action trading on gold? So as I said, we did a session about 3-4 months ago on it. You're very welcome to go back and check it because all of these sessions are recorded, but we'll just be going a little bit deeper into a couple of those elements today. And, we'll do more sessions on gold in particular in the future as well if people like them and ask for them. Okay, as I said, we want these sessions to be as insightful and as helpful, and as valuable as possible to yourselves. So, we're always open to that feedback. And as always, we'll have a little look at live markets as we go. So for those of you who don't know me, my name's Paul, traded for many years, traded for funds, traded for clients. FX indices and commodities would be my preferred sort of trading asset classes. I tend to be a trend trader for longer term trading and a reversal trader for sort of shorter term intraday trading. That's the way I look to operate in markets. So I think most of the people who have joined us, have been aware that for most of the time, we do Wednesdays as price action sessions, and the whole idea being that to just, it can be a bit overwhelming, a little bit intimidating for completely new traders to sort of just understand what has been going on. But what we talk about is, by understanding a little bit about how candlesticks are formed, how price action is delivered, well, then it becomes easier for traders to analyze and understand markets. So each week, we're just trying to add a little bit more just to sort of help you become better adept at trading markets utilizing price action. And as I said, you can see we've been through an awful lot of sessions there, haven't we? We've covered an awful lot, hard skills, soft skills. Today is, it's a hard skill session. And as I said, it's session 46, how to trade price action on gold. And yeah, we looked at, there we go, session 34. That's where we did the initial one. So it was a few months ago. All of these sessions are recorded. They are all on the Admirals YouTube channel. So be sure to subscribe to that. Maybe there's a few you've missed. Maybe there's a couple that you just need to recap just to help, you know, settle those details in your own mind. That's absolutely fine. That's what that's for. And as I said, we're just trying to cover as much as we can to give you as much, you know, opportunity to engage with markets utilizing price action. So if you remember, you know, those of you who've joined us, we've talked about having an overall sort of 10 steps for a new trader entering the market utilizing price action. First 5 are what we'd probably call hard skills. Namely, that's what we said, is that, you know, whenever you open a chart of anything, regardless of what it is, whether it's Bitcoin, whether it's euro, dollar, whether it's copper, first thing we do, define levels of support and resistance on that chart. Start at the monthly, down to the weekly, down to the daily, okay? Draw those levels in. Step 2, define if there is a trend. As I say, good trend, leap off the chart. You don't need to force it. If you feel that you are forcing it, it probably isn't there. Ideally, what we're looking for is if there is a trend, well then, you know, we want to be in a position to be able to sort of, you know, buy pullbacks in an uptrend and sell rallies in a downtrend, which means step 3, we're looking to see, you know, how does price react at key support and resistance levels. Those levels might well be the levels you've drawn in at step 1. It might well be big round numbers like $2,000 on gold or 2,000 on the Russell, etc. at the moment. You know, or they might be, you know, dynamic support resistance, which is where some people might use moving averages, and we can look at that as well in a moment. Because what we're looking for is step 4, look for some price action triggers, okay, at those significant levels. The triggers being the candlesticks that we've talked about in previous sessions, things like pin bar, engulfing candle, star formations, inside bars, key reversals, etc. All of those there, because they are ubiquitous across charts. But also just to remember, step 5, is it part of a bigger chart pattern? And what we mean by that is that, you know, as a new trader, sometimes we get ultra focused on trying to trade every engulfing candle we see, but we can't see the wood for the trees. So we want to take a quick step back. Is it part of a bigger chart pattern? Because that chart pattern in itself might also be a tradable pattern. Then we've got the back 5, okay? The 5 R's that we like to talk about, all right? And this is what I talk about in terms of, these are the 5 R's. These are kind of the soft skills, but these are the skills that, you know, sometimes new traders don't really fully appreciate, but I assure you, the longer you trade, the more important they will become. Step 6, risk. Accept the risk, okay, and manage it. And you manage it by never trading without stop loss, only risking a small portion of your capital on any one trade. The flip side of that, step 7, reward. Are you going to use a target, or are you going to have a trailing stop? The important thing is that you know which one you're going to use before the trade goes on. Don't be switching horses in between. Step 8 is keeping good records. All right. Keeping good records is one of the quickest ways for you to accelerate your own trading progression. Because if you are keeping good records, well, in step 9, you need to be reviewing them, right? You need to review your trades in order to improve as a trader. And then step 10 is about repeating. It's about being consistent and disciplined. It's hard to be one without the other. It's about repeating the good trades, okay, the trades that come out of your records, and reviewing about which are the trades that work for you, and about cutting out the sloppy, impulsive, knee-jerk trading, okay, which generally just doesn't help you. So got those 10 steps. There is a very simple trading guide that you can take away. It's not perfect, but it is the start of a good framework that ensures that you're doing the right things day after day. And that's the important thing. It gets you into a routine. And these are the things that can help you. We've also talked about trading an awful lot of different asset classes and different instruments. So we've said when it comes to FX, we would focus on the dollar index and about 28 of the major and minor pairs that you can see there, looking at the global indices, the major global commodities, equities, and also crypto, all of which are available to trade through Admirals on the MT4 or MT5 platform. As I say every week, for some people, that might appear like quite a broad, watch list to begin with, and that's true. But you know what will happen is as you do keep good records and review them, you'll start to realize, you know, which of the instruments in particular tend to suit you, and you will probably tend to focus down over time to about 2 to 6 instruments, and that's absolutely okay. But everyone will have their own particular favorites, and that's absolutely fine. It's about what resonates with you, and the way you find that out is by keeping good records of your trades and reviewing them. So there we go. So we always do that introduction because I want to ensure that we are embedding best behavior, okay, best practice in your trading business, as soon as we, for new traders, doing that as often as we can. And as it says here on the slide, many new traders are happy to focus on trading FX markets or equity indices, and they're both excellent asset classes. I trade them myself, but lots of other people will like to trade other asset classes, one of them being commodities. And we have done individual session on the overall commodities asset class. As I said, you'll find it in the YouTube channel. But what we have done is we've previously looked at price action and gold in session 34. But as I said earlier, we've had quite a few feedback and requests that they'd like us to cover it again. So here we are, ladies and gentlemen. So today we'll go a little bit further on gold, all right, using price action on a swing and intraday basis, and we'll just have a little look at how that plays out for us. So hopefully we'll just go a little bit further and deeper in this session, and then we might do another session in a couple of months' time, just basically taking it, session by session, just a little bit deeper for those who particularly like to focus on trading gold. It would be interesting to know, of those of you joining us here today, ladies and gentlemen, how many of you are already trading gold, whether it be position trading, swing trading, intraday trading, scalping. It would be interesting to know, of those of you joining us here today, how many of you are actually trading gold. Maybe you've seen it and you're interested, but you've not really got through to engaging it. Maybe it's part of your normal trading style. It's absolutely fine. It's just always interesting to hear what other people's experiences have been. So, as I said, we'll start with a very quick recap, just a few of the slides that we did in session 1, just to basically remind people of what it's all about. Remember, gold is part of the commodities asset class. There's hard and soft commodities. What you'll find is that Admirals will offer you gold to be able to trade, along with silver, palladium, platinum. You can see Brent oil, crude oil, okay, West Texas, and natural gas, and a few others, okay. But for the most part, you can see that they are able to trade, the major commodities you're able to trade with Admirals. And you can actually also trade some of the companies that are directly related to the commodities markets, okay. And if we have time, we'll look at them later. But today's session, the important thing is, well, of course, you can trade gold along with other commodities on both the Admirals MT4 and MT5 platforms. Now, when we talk about gold, and in fact, when we talk about any of the commodities, regardless of how you wish to trade them, whether you wish to trade them using price action or other forms of technical analysis or fundamental analysis or sentiment analysis, the important point to note is that you have to keep an eye on the US dollar. All of those commodities are priced in US dollars, okay? I know we've seen over the last year, there's been lots of news and rumors about, certain BRICS nations wanting to be able to trade commodities in other currencies, and undoubtedly that will occur. But the reality is that for a good long time, all right, certainly as long as I'll probably be trading, we will probably find that commodities will still remain to be priced in US dollar. All right, and so it becomes important for us as traders to keep an eye on the US dollar. The US dollar is still and remains the reserve currency of the world, based on the largest economy in the world, which is still the US. All commodities, whether they be hards or softs, are still priced in US dollar. So what you will find is that all countries will need to hold US dollar in order to facilitate commodities purchases and other global trades. And in the FX world, over 50% of FX trades involve the US dollar. So therefore, the US dollar, as it says, is keenly watched to see what, if any, impacts it will have on the commodities markets. US dollar moves will have major impact on gold price moves. So it is just the smart way for you to operate, to understand that relationship between gold and the US dollar. And it might also be said, gold along with other currencies and commodities, which we will look at in a few slides' time. So if you are, it might even be said that if you are a gold trader, you are actually a US dollar trader. Okay, you are also a US dollar trader, right? And so you have to just be aware of that if you're completely new to trading, and you have to build that into your understanding and build that into your watch list and your processes in terms of how you go about defining operating in gold. So we said that, we're trying to understand why is gold important? Why is gold popular with traders and investors? Well, in the past, gold was very hard to mine, meaning it was difficult to obtain. Hence, that was one of the reasons that it was valued. And gold was used as a way to acquire wealth, store wealth, facilitating trade. And early currencies were indeed backed by gold. And we hear all of these rumors, okay, that if there is effectively almost like a BRICS related commodities currency, that that might well be a version of the yuan backed by gold itself. So early currencies were backed by gold, and there are, as always, rumors, okay, that any let's say competitive, all right, or competitor to the US dollar might itself be backed by gold for commodities trades. That's probably that's down the line, that's outside the remit of here, but you will probably, as you get deeper interested in gold, you'll probably see and read and hear elements to do with that. And so for centuries, human beings, all right, have held gold in high regard and will still covet it. Okay, I'm sure that I don't need to explain that too deeply, regardless of where you are joining us in the world. I'm sure you will all have seen an experience of people, institutions, organizations coveting gold, and that has not changed. So, with that in mind, well, what do traders, investors need to be aware of? What do they need to sort of take on board? Well, investors in physical gold include individuals like me and you, a huge amount of it by central banks, okay, in one way or another, and also funds, and in particular, exchange traded funds who do it on behalf of their clients. And that in itself is quite an interesting topic all of its own, in terms of understanding whether those exchange traded funds actually have enough physical gold to back their liabilities. That in itself is an interesting topic, once again probably outside the remit of this here, but ultimately gold remains to be seen as a safe haven investment. All right, that's still one of the elements of it, and that's one of the elements that we will talk in a moment about, the demand for gold, where that comes from, because it's still seen as a safe haven investment. Of course, recently, over the last couple of years, we've lived in a rather eventful world, shall we say, and there were many people who were talking that Bitcoin would become almost like digital gold. My view would be that that has not occurred. Okay, my view has not occurred, and that gold still remains that choice as one of the major safe havens. That could change in a generation's time, but today, in terms of what we're interested in trading, that is not the case. Even though gold pays no dividend or no interest. So you are always looking for capital appreciation in gold. As an investor, as a trader, you're looking for volatility, you're looking for moves, okay, whether they be up or down, as a way to actually be able to engage with markets. And you will still see is that there will still be people who will use it as a hedge against inflation. And of course, the last 18 months or so, inflation has been, I would say, just the sort of the number one theme, the number one narrative, right, that we've seen. Central bankers, governors, traders, investors, etc., financial elements looking to understand, to manage, and to deal with. And that has an impact itself. That has an impact itself on gold. Perhaps maybe not as much as in the past, but it is still relevant, something that traders and investors should be aware of. So, we had a little look about, where it's come from, why it's popular, but really we want to look at, well, okay, how do we look to trade it? How do we look to trade it along with price action? How do we work with that? Well, what we've talked about in the past, okay, certainly I've talked about and we've done sessions on, is about understanding the underlying narrative in terms of risk sentiment. Okay, and you will hear traders, myself included, talk about understanding the roro sentiment. Okay, whether we are in a risk-on narrative or whether we are in a risk-off environment, which can make a big difference. Okay, So just Darshan sort of made a comment that property in UK has steadily, even if modestly appreciated. Safe gold sadly has flatlined and off its highs in 2009. So one who believes in buy and hold should have seen no gains over 15 years. Surely it should break out and trend upwards to catch up with safe bricks and mortar. Yeah, that's an interesting point, Darshan. Many would say that, if you're looking at over the last 10 odd years or so, that certainly here in the UK, property had appreciated much better than gold, and people might expect that to catch up. I think that is probably a reflection of the kind of overall sort of macroeconomic picture that we find ourselves in here in the moment, in terms of that quantitative easing that we had for those kind of, what was it, really about 12, 13 years, but over the last year or two, that has changed, and I think that's why we've seen impacts in inflation. We've seen that impacts in some of the currencies, some of the indices, in particular like the tech stocks, and also some commodities, and that might well accelerate as we go into the sort of the remainder of the year, and whether we see if central banks have truly grappled with and overcome the sort of the inflation challenges that we've seen over the last 18 months. But good point, Darshan. Thank you. But let's talk about roro. Okay, so let me just bring up the old drawing tool here. When we think markets are in a risk-off mode, right? When markets are in a risk mode, that means effectively traders, investors are less inclined to want to either hold risk or take on board risk. They are looking for safe havens. So invariably, when the market is in a risk-off environment, we tend to see gold going up. We also tend to see Swiss franc and Japanese yen going up, and in particular, the relationship between Swiss franc and gold is interesting. A lot of people would say that the Swiss franc is in itself directly backed by gold. That has an impact upon the relationship between them two, which we will look at in a moment. What we also see is when we are risk off, okay, we normally see oil going down. All right, why would that be? Well, if we're in a risk off environment, that means that invariably it's probably money's going to hide in capital rather than be put to work, which means that invariably the industry and business there will have less demand for oil. If there's less demand for oil, the price is likely to go down. What we also see are some of the what some people might call the beta currencies, but what we see things are sterling, Condor, the risk on currencies that if the risk off, you will see things like Aussie, Kiwi dollar, sterling in particular. Those three are likely to depreciate. Those three are likely to go down. And alternatively, when the market changes and the market is in a risk-on environment, well, this is where we start to see gold actually depreciating. We'll see safe haven currencies like Swiss franc and Japanese yen go down. Oil will go up because there's more demand. Everybody's feeling a little bit more excitable and giddy about prospects for the global economy. And invariably, as people move out of the risk-off currencies, you'll find them moving into the risk-on currency. So we'll see Aussie, Kiwi dollar, and sterling going up. So what I say to new traders is, I appreciate that sometimes it can be a little bit challenging, to analyze and understand all that whole huge global picture. But even if you just have a starting point of trying to understand what environment the markets are in at the moment, are we in a risk-off mode or are we in a risk-on mode? Sometimes it will be very, very clear. Other times, not so much. When it's not really clear as a new trader, well, you probably should tread carefully. Okay, in an ideal world, we would like it to be clear, but we don't always get clarity that we want. All right, but in a particular case like here, this is I've got a profile here, gold daily. So what we can see is basically gold has been going down there, hasn't it, for about since the sort of mid July. So for about the last 3-4 weeks. At the same time, oil has been going up, hasn't it? What we've also seen is dollar going up and Swiss franc going down. We have seen Aussie dollar going down whilst US dollar has strengthened, and we've also seen the dollar index strengthening as well. So remember what I was saying. The relationship between the US dollar and gold is very is a crucial one. So when US dollar is strengthening, it's not a surprise to see gold weakening. Well, not a surprise when we see oil strengthening very clearly. No surprise to really see that gold is also depreciating there as well. So these understandings, this understanding of these kind of market relationships, that's a good starting point for traders to just get a hold of understanding, what environment is the market in. Raquel says she's sorry for being so late. Raquel, you are always welcome here. All right, you're always welcome. Everybody's always welcome. It's always great to have people here. Okay, and but yeah, as I said, for new traders, even if you're in a position to understand the risk environment, are we risk on or we risk off? Okay, that is an understanding. That's just being able to understand that is can be enormously helpful. And so looking at that myself, when we're seeing gold down, dollar up, oil up, well, people would start to be saying, well, that's a little bit of a risk on sentiment there. That's the overall. Whether you think that's right or wrong in terms of the news that you watch, the mainstream media news, etc. Looking at the economic news, price is always the key. Okay, we always look to trade what we see, not necessarily what we think. And what you can use to help is, for those of you who are Admirals clients, well, you do have access to the premium analytics. Okay, there's a tool there you can go into once you're into your account, and you can actually choose. You can choose gold, and it will provide you with all sorts of news and information and sentiment related to gold as well. So there's plenty of data there to help you build that picture of, are we in a risk on or a risk off environment? Okay, and that's undoubtedly it's undoubtedly very helpful. It all helps you build that picture. So, as I said a bit earlier, ideally, we'd like it to be clear. All right, we'd like it to be clear which risk on or risk off environment we're in. Sometimes it will be very clear. Other times it won't be. Other times it will be. Other times the markets and the charts, they may look murky. They may look unclean. They may look difficult to decipher. That does not mean you're a terrible trader or an analyst. Okay, that can actually happen. All right, that can happen. Markets transition, they change, they go through periods of consolidation before they expand. All right, they surge and then they rest. All right, that happens. But ideally, what we're looking for is to be in an environment where it is particularly clear. And once it is, well, then I'm in a position to sort of switch across to my Admirals platform. I have what I call a roro profile on there, which we'll go to in a minute. And that allows me to sort of, have a little look for correlated trade setups. All right. Ideally, I want to trade in the direction of the risk environment. All right. Yeah, I'm not looking to fight the market. If it's a very, very clear risk on or risk off environment, I want to trade in that direction. I don't particularly want to fight it. There's no point. I mean, you are welcome to fight it, but you'll probably lose. Okay, you'll probably lose. Why do that? If you're finding yourself constantly fighting the market, well, then you probably need to sort of have a little word with yourself and understand what's going on there. Why is your ego insisting on it fighting the market rather than us just trying to be like surfers? Okay, just a good surfers, just looking to surf the best wave, right? And when it comes to the roro sentiment, that's what we're looking to do as well. We're looking to just surf the best waves rather than trying to fight them. So for myself, as I was just saying there, when I'm looking at trading gold in particular, I'm looking to trade gold in the direction of the risk environment when it's very clear. If it's not clear, even for me with all my experience, there are times I look at charts and think, I have no idea what's going on. There's a good chance that we're in a period of transition of some sort. When the market's like that, or then invariably, that's when I particularly start to sort of step away, okay, or just hold fire until it becomes, it becomes clear, okay. So Kareem says, hello, yes, do not self-sabotage yourself, read the charts, find correlated markets and go with the flow. That's absolutely saying that, roro is just risk on or risk off. Okay, that's all that is. But yeah, it's wise words. Okay, read the charts, find correlated markets, go with the flow. Don't fight. All right, don't fight the markets. Nothing good comes from fighting markets. Okay, so as I said, I'm looking to trade in the direction of the risk environment. And I will happily use, I will happily use all the charts, okay, but I would not expect new traders, okay, even if you just focus on the daily, the 4-hour, and then some of the shorter term, if you look to engage on a shorter term basis. But for many traders, even just having the daily and the 4-hour might be enough for swing trading. But if you wish to go lower, then the 60, the 30, the 15, the 5 minutes are applicable. Raquel said, can you briefly explain what is a roro profile? I most certainly can. Not only can I explain it, but I'm going to show you it in a moment, Raquel, okay? I'm going to show you on my charts, all right? That's probably the easiest thing. But what I'm looking for is, I'm looking for correlations between the dollar, right, and also oil and Swiss franc and Aussie dollar, which we will look at in a couple of slides. And then I'm looking to trade, as I said, in the direction of the risk environment, utilizing the price action setups that we have covered before. All right, we've covered again and again. They are all there on the Admirals YouTube channel. Pin bars, engulfing candles, star formations, key reversals, price action combinations, or even just bounces off the 50-period moving average in the direction that we are looking for. So, as I said, let's not overcomplicate it. Okay, let's keep it as simple as we possibly can. So, a roro profile. Raquel asked me just with perfect timing about what that is, and as I said, I've got one here. Okay, and it's just a profile where I've got several charts. You may wish to use these ones. You may wish to change that. That's absolutely fine. But I have a roro profile to give me an understanding, help me understand, are we in a risk on or a risk off environment? So, I have gold here. I have the dollar index. So, gold is going down, dollar index is going up. That's starting to, as I said, give me an idea. I have oil, West Texas is going up, and also dollar against the Swiss franc, okay, which means the Swiss franc is weakening, right? Remember, we're saying there's a relationship between Swiss franc and gold. And then I also have Aussie dollar, okay, which in itself has been weakening as well. Remember, Australia is a great miner and exporter of gold, so invariably there's a reflection there. So that's interesting. As I said, we've seen Aussie dollar going down, okay, gold going down, dollar going up, all right, Swiss franc going down. This is giving us an indication that there is dollar strength there in that market in this week or two that we're looking at here, and that that is I'm starting to already form a picture of, okay, what's going on here. At the side, I also have, I have Bitcoin here, okay, just to see what's happening there, because that can be reflected with regards to the dollar. I also have the Treasury notes here, okay, which is sometimes that can be very helpful and clear in terms of understanding the interest in the dollar. Okay, sometimes that reflection of that. But if you're a new trader, don't feel that you need to build that. And I also have dollar against yen because the dollar and the yen, that the way that moves is that can have a reflection on the risk and also give us an idea of if we've got risk on or risk off as well. The dollar is a very interesting currency in that sense at the moment. Many people would associate it as actually being a bit of a risk off currency, basically because when the whole global market gets a little bit scared and goes into a risk off environment, very often people will utilize that to either buy American tech shares, which have become a little bit of a safe haven, or they will look to buy, American treasuries. Okay, but if you have to buy those American treasuries, you have to buy those American stocks. Well, you need dollars to be able to do that. So that can give the dollar a boost. So, as I said, the dollar is very, very closely correlated with the commodities because of the price in dollars, but also there is let's say a wider picture that goes that needs to be sometimes taken into account. But for new traders, even if it's you've got the gold, the Aussie, the dollar index, oil, dollar, Swiss franc, even those as a starting point is a good starting point to build a roro profile. I recognize that we have people from all over the world who join us for our sessions. So, I'm looking at this through my lens of, UK, Europe, Western view of it. I appreciate we have people from all over the world. And so, you might have one or two local elements that might be of a particular interest to you, okay, that might also give you an insight on whether there's a local sentiment in terms of whether it being risk on, risk off. But as a starting point, this is a very good one. And as I said, you can see you've got all of those on daily, and I can very quickly get a grasp of are we in risk on or risk off mode at the moment. And even if I want to look at an intraday basis, okay, so I can just go down to, I like 30-minute charts, and we can see here is that basically when I was just taking a screenshot from earlier today, gold actually on the intraday basis was rallying before it was rolling over. Dollar Swiss franc, okay, was rallying before it was rolling over. West Texas was basically falling before it changed. Dollar index was kind of going sideways, before it made a little blip. Treasury notes were kind of rising before they dropped themselves, okay, and Aussie dropped before it turned up. So, on an intraday basis, that's a little bit more, not as clear as on the daily chart, and that's what we can see. All right, and that's why we have a little look at maybe the daily charts, but then also the intraday charts. For swing traders, 4-hour, daily, maybe even the weekly, when there's a very clear element of that risk environment, it's normally very clear on the charts because there's more data coming into them. So invariably, it's sometimes easier to understand. Whereas on the intraday can swing very, very quickly. Okay, can swing very quickly for you and against you, and about understanding that is part of actually sort of just understanding that as that kind of relationship. So Anonymous says, if your main currency is euro, would you use an account in dollars to minimize the fees on every transaction, or would you prefer to pay a conversion fee and avoid the risk of dollar depreciation? And that's a good question. It's probably a little bit outside the remit of our session today. A lot of that would also do with, in terms of when you're talking about dollar depreciation and what impact that might have on in terms of fees, etc. Some of that would also depend upon your timeline as a trader. I think, if you are a swing trader who's holding positions for weeks and months, well, then invariably you need to be able to sort of, build that into your overall business plan. If you're someone who's intraday trading, okay, and is not carrying positions overnight, you might have a very different view on that. So it's a good question. It's a big question, but a lot of that would also depend upon individuals, how they are looking to operate in markets themselves. Okay, so bang. What I wanted to talk about, as I said, and what I wanted to sort of just go a little bit deeper in and help people with is understanding those correlations. All right, if you're able to understand those correlations, that in itself can help you with your analysis and in terms of the direction that you're looking to trade with. And so, what I've got here is we've got the gold and the daily chart and the dollar index. You probably noticed that my gold charts, okay, I have my bullish candles in gold. All right, so when I'm looking at maybe 8 or 10 or 12 charts, very quickly I can cognitively recognize which is gold. But also, I said dollar index, okay, the dollar index, the dollar against a basket of currencies, and as I was saying here, you can see here we have, this is, we've got, this was July, okay, as we come into August. And if you look at that, remember what I was saying is, the dollar index, it dropped quite significantly before powering on through in the second half of July and into August. And the gold, we kind of rose up there before sort of rolling over and falling into and being into a downtrend. See how they're almost kind of diametrically opposed. There is a inverse correlation between them, and as I said, these are the things that can just start to help you build that picture of, what is the risk sentiment, what is the risk environment, okay, because I want to trade in direction of the risk environment, and what we have looked at is that, the dollar has been strong, okay, and gold has been weak. So invariably, that's just giving us a little bit of indication there. If I was going to be trading gold, ideally, I'd probably be looking at, in this month, I'd be looking at it to the short side. All right, that's what we'd be particularly focusing on. So it's good to have it, understand, to be able to see the two charts, gold against the dollar index. We could also, other correlations, is, as I was saying earlier, gold here and also against oil, okay, West Texas. Remember what I was saying is that basically, you know, when oil is rising, that is normally an indication that there is a risk-on environment in place, because people think that, you know, the economy is going to do well. If the economy is going to expand, there'll be more demand for oil. That basically rallies the price up there. And hopefully you can see over these kind of last 6-7 weeks, you know, that has been pretty much one-way traffic on oil, hasn't it? Am I right? Oil has been strengthening, whereas over the last 3 or 4 weeks, you know, gold has clearly been weakening. So, you know, that's telling me, that's just reinforcing that. For whatever reason, you know, markets are in that kind of risk on environment at the moment, okay, because, you know, oil is rallying, gold is falling. So, you know, that means that I'm going to be have a bias to the short side, trading gold based upon that. Another one is gold, okay, against the dollar, against the Swiss franc. Okay, remember we were just talking about you want to understand the impression of the relationship between gold and the dollar, but also between gold and the Swiss franc. All right, Swiss franc, as I was saying earlier, you know, it's deemed to be a safe haven because, you know, it's backed by gold. All right, so the number or the percentage side that it's backed by, okay, well, people can argue about that, but that is the view. All right, that the Swiss franc is a gold-backed currency, so it has an interesting relationship with gold. So we can see here, you know, look at interestingly, you know, the dollar index, as we looked at, or dollar against Swiss franc, it dropped at the start of July, and then we based out. And what I'm interested in, remember, I was saying is, you know, that is, you know, it's a bullish engulfing pattern. That's a bullish key reversal pattern. It then basically puts in a second one here. You know, it's a really bullish engulfing patterns, a bullish key reversal pattern. You might say that we'll pull, you know, this is almost like, you know, there's a double bottom formed here before we rallied away. And we look at that in reflection of the dollar, the gold. You know, when dollar Swiss franc dropped, gold rallied, and then what did it do? You know, we put in, you know, a bearish engulfing candle, put in a bearish key reversal candle. It's almost like I said, a double top before we dropped there. So hopefully you can see the kind of inverse correlations there. All right. So, you know, as I said, having a roro profile helps us build this picture, you know, piece by piece. And another one is Australian dollar against gold. Okay, so Aussie dollar here, gold, and hopefully you can see how closely correlated they are, even just, you know, visually. Namely that, you know, at the start of July, having been sideways, okay, Aussie pounced its way up. Okay, gold had done the same. It pounced its way up, and then invariably it reversed and rolled over, didn't it? And it's just been in a downtrend for what's happened, maybe the last month, and gold did pretty much the same. Okay, rolled over and it's been in a downtrend for pretty much the month. So, as I said, all of these elements coming together help me build a picture. That's why, you know, I don't want to be fighting that picture when it's, you know, when there's a clear sentiment there, a clear environment. I want to work with it. I don't want to particularly fight it. So, you know, here's some homework for you before we switch the charts. You know, you might want to establish yourself a roro profile, which we'll look at in a moment, and you analyze that to establish whether we're in a risk on or a risk off environment. As I said, sometimes it will be very, very abundantly clear. Great, okay, work with it. Sometimes it will not be, because markets are in transition, or, you know, they're contracting, in which case tread carefully. Okay, tread carefully. You know, it's not a case you have to trade, you know, every day, all the time. You want to be trading when the environment suits you. Furthermore, you know, have a look at your roro profile. Can you see the correlations between those instruments and the roro environment, like what we've just looked at there? Okay, can you do that? Have a look at what is the relationship between gold and the US dollar. How are they working out? Is there a very nice, clear inverse correlation? Because that's helping us. And if so, out of that, you know, if it's very clear, well, can you identify those trade opportunities? Can you identify simple price action candlesticks that allow you to trade in line with the dominant risk environment? Because that's where we want to operate. So before we have a quick look at the markets, we've got a minute or two. You know, price action, remember, is always about analyzing markets using just, you know, the movement of price over time. And we're always looking for price action triggers at significant prices, levels, or zones in line with the trend or the risk environment. That's what allows us to build simple price action trading plans. As we've covered, gold has been coveted for thousands of years. The reality is that is unlikely to change. And to help trade gold, it's worth setting up a commodities profile, but also a roro profile on your Admirals MT4 or MT5 platform. And it always helps to understand gold in the context of the wider risk environment. Are we in a risk-on environment or are we in a risk-off environment? If you can establish that, well, then you can trade gold in line with the risk environment, right? And why do people trade gold? Well, actually, a lot of people like it because there is movement, because it's volatile, it's liquid, and it's relatively cheap in terms of its spreads are tighter compared to some other commodities and some other instruments. As we've kind of gone through, it's important to understand that relationship between gold and the US dollar, and also the other correlations of gold versus oil, the Swiss franc, and the Aussie dollar. And as you've heard me say a few times, trading gold, I prefer to trade in the direction of the prevailing risk sentiment, and then use price actions, candlesticks as our trigger, regardless of whether you're trading swings or intraday. That's what I'm looking to do, and we'll have a little look at that in a moment. So before we switch across the charts, don't forget that actually what will happen is that our next session will be on the 23rd of August, but that is a Wednesday, not a Friday. Join myself, for the next session, Wednesday session 47, how to trade 3-bar reversals with price actions. Talking about what is it, where do you find them on the charts, what's the best way to trade them. That is Wednesday, 23rd of August. Check your inbox for the webinar link, or head over to the Admirals site and be able to sign up for it. As I said, if you've got questions or comments, or you'd like me to cover particular elements, you can do so. Contact Admirals there. You'll also, as I said, get a feedback form after this. Would really appreciate if you just took a couple of seconds just to fill it out. We do appreciate that. So we have, as always, we're overrunning a little bit, trying to push in as much as I can, but let's switch across just for a moment or two across to the charts and have a look at my roro profile. So just bear with us a moment, ladies and gentlemen. Okie dokie. I'm hoping for this. Great. Okay. So I'm hoping you can still hear me, hoping you can still see me, but also see the charts. This is, let's get the old drawing tool up here. This is my roro profile here. As I said, I have Bitcoin there, just out of interest, dollar yen. You can see gold is in the middle, dollar index, Aussie dollar, dollar against Swiss franc, West Texas, and also the Treasury. Why do I have it particularly set up like that? Quite really, it's just so that I can actually just basically expand my gold chart like that to cover it. Once I've got a quick idea, I can look at it, because as I said, I'm interested in, I'm just going to move this over a second here. I'm interested in, where is gold? What's the tool? Where is gold going in comparing to, oil, dollar, Aussie dollar, Swiss franc, and wanted to understand those relationships as quickly as I possibly can. So Teresa says, I haven't seen before these correlations so clearly. So thank you very much. You're very welcome, Teresa. I really appreciate the feedback. As I said, always try and cram it as much as I can. The whole idea is to help you just be able to build that picture. And as I said, if you're a new trader, even just being able to understand the risk environment is a good starting point. All right, it's a really good starting point. And when it's clear, trade with it. When it's not clear, it's murky, just hang fire and just let the market work its way out. So you're very welcome, Teresa. I appreciate the feedback, and thank you thanks for joining us, and thanks for giving us that. So as I said, hopefully you can see how clear it has been here at this particular clear moment. And then what I'm looking at is, I'm looking at the 4-hour chart, which has been a little bit challenging the last couple of weeks. And the reason is that we're into August. August is normally a little bit of a thin time. I did a session on trading these summer months. They're not necessarily as clear as we'd like, but let's get the old drawing tool in. What you can see is that, not only has the daily chart been going down, but so is the 4-hour charts going down. The 50-period moving average is very clearly in a downtrend, isn't it? And so really, as I said, we want to trade with the risk sentiment. So every time we're seeing trades pull back, we want the opportunity to be able to in this case, to short, because the risk environment, okay, is risk on, which means gold is likely to decline. So we want to basically trade and flow with that. We actually had a little pullback here, but actually I didn't trade that. I didn't trade that engulfing candle, that pin bar. And the reason being is because we had seen price bounce off the 200 period moving average at that time, and we were very, very close to it. There wasn't really space to be able to move it. Now, of course, as is always the way, it actually traded through it this time and worked its way down. But woulda, coulda, shoulda. Okay, you have to make a decision at the time based upon what you're seeing, and by which time then we were running into NFP. So, and as you can see the news there. NFP looks as if the price was going to push up, but actually the prevailing environment continues. Okay, so if you're awake at the Asian session, some people would have traded that particular pin bar. This one here, a small little pin bar there, people would have traded that. Not myself. Why? Because it's in the middle of the night here in the UK. But if you're elsewhere in the world, Johnny, if that is in the Pacific session, if you're in the Pacific or West Coast of the US or Asian session, that would have been, just a way to sort of trade pin bars in line with the overall trend. We had a little bit a couple of earlier this week, right, where basically price had pulled back and had given us a rejection candle before it dropped down. And now we're going a little bit. We had the CPI data, and now, as we're getting towards the end of the week, things will be getting a little bit quieter as we go into the end of the week, B, as we sort of go into that period of where people start to go on holidays, etc. So I would expect it to continue in that direction until the majority of the major players return to the markets, and then they'll make a decision for which way are we going for the rest of the year. Okay, and that'll happen, I suspect, in a couple of weeks' time. So hopefully, as I said, hopefully you can just see there that it was quite being able to understand the risk environment we're in, and then looking to trade in line with that. Now, more advanced traders might have been using that just as a bigger risk trade, saying, well, actually, do you know what? There's not as many setups in gold as I want, but I might have been trading oil with that. I might have been trading dollar index. I might have been trading Aussie. I might have been trading dollar against Swiss franc. So, although we're focusing on gold, once you get into a routine of doing your analysis and understanding the risk environment, well, then actually, if there's not the setup, if there's not the trigger on gold, it might actually well be on some of those other correlated risk assets. But that's a little point to take away that you might want to think about for your future trading plans. Okay, ladies and gentlemen, unfortunately, as always, we have run over. I've overrun a little bit, but it's because I'm always trying to cram in as much as I possibly can to sort of help you, give you basically be able to stuff you can take away and utilize in your own trading. As I said, if you're a new trader, even if you can just utilize gold and those other correlated assets just to get an idea of what the risk environment is, that puts you in a good starting place. Right? That puts you in a good starting place to have a bias. And from that, well, then, whether you're a position trader, a swing trader, an intraday trader, you can work with that. When it's very clear, don't fight it, trade with it. When it's murky, when it's not clear because markets are transitioning or changing or they're just contracting, well, then just hang fire until the environment is clear. Okay. And as I said, for new traders, that itself can be a great starting point for you to work with, ladies and gentlemen. So Kareem says, very nice webinar, always good and really informative. That's very kind of you, Kareem. Thank you very much. Kel says, informative. Thank you, and have a great weekend. You too. All right. So thank you for everybody for joining us. I hope this useful information you take away and build into your own trading plan. Have a fabulous weekend, a fabulous trading week, and I will see you Wednesday, 23rd, for trading 3-bar reversals using price action. And until then, trade well, everybody. Cheers.